Presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Basil Chapman, Tiger Technicians Hour. This is the first Tiger Technicians Hour of what? 2014. Unbelievable. 2014. Got an even number there. And it's going to be a very, very, very interesting year with an emphasis on interest, as in rates. That's number one. Number two is I've spent now a great deal of time on the scenarios, two scenarios. Suddenly, there was a third scenario. Discussed it in detail with someone last night, actually. And that, to me, is also a very interesting phenomenon, because I was at a New Year's Eve party last night. I don't know how many people there were there. 50? Maybe more, maybe less. I don't know. And this whole crowd, and to a certain extent, I'd say mixed age groups with an emphasis more on middle-aged. But there were younger people as well. Out of everyone there, I spoke to three people, and all three were berating the fact that they were, four people were berating the fact that they were in bonds or bond equivalents, but they were not fully invested, and that they felt, or they were being encouraged, to put more money into the stock market. Sometimes anecdotal is just anecdotal. And in the den, Basil, you're partying too soon. Nah, I've been going out just about almost since I've been back. One of the things that I'm fascinated with is that there is anecdotal and there is a reference point of anecdotal. In other words, one person I spoke to, I can distinctly remember back when our children, the boys, were 5 and 6 years old, standing in Crystal Lake here in Newton, a very pretty little lake where there's a certain section for swimming, and there are guards and all sorts of things there, the usual strictures. I haven't been for years. I can just imagine how politically correct it is right now. In fact, you probably have to sign a waiver before you go in. I remember standing with David, and we were ankle deep in the water, and we were talking stock market. That was back in the 80s. And talking, I know the kids could have disappeared. We were just so busy talking. Anyway. And so this is someone for a long time. And he's bright. He's a very bright guy. He's a specialist physician in a particular field. Very well respected. And so whenever we've met, that he had to do his own to make decisions and dumb enough to make mistakes. Hey, isn't that, all of us? So what happened was, the last year I'd seen him a number of times, and we had spoken kind of more politically than anything else. We really didn't talk much about the market. He said he was doing okay. And last night he said the stuff that he has and he's chosen to keep in one particular natural gas stock, which has just been on a tear for ages, he's done very well. But in the overall portfolio, and this is kind of the theme, he was way, way underinvested. And he was berating the fact that he was. And there were other people. There was a lawyer who also plays a great jazz piano who mentioned that he felt he was underinvested. A lot of people, in fact. So I'm saying to myself, well, let me see what I can do with that important bit of information. because it pertains to an age group where a lot of the people that I've been in contact with for a very long time have been in the stock market forever, since they were young, since they had any money that was available for investment. Now, I couldn't call it discretionary money because it's money that was not going to be thrown away. It was going to be used for a specific purpose, even if they made mistakes. And I think that there are a lot of people out there. And that pushes me towards the scenario that says, even though I'm anticipating a pretty deep correction very early this year, could be very early this year, and then a pretty good rally, a very good rally, how you put the pieces of the puzzle together for the longer term is going to be so important. How do the steels and the aluminums hold up here? Some are doing very well today. How on earth are you able to put into the context of longer term investment plays that you might have wanted to take or you have taken profits in? How are the banks doing? How come we in my portfolio for my subscribers, we have one stock that's up 2.5% just today. We have another stock that's up about 8% in just 2 or 3 days. And others we've taken profits in. Others are up, but down from the close on Tuesday. How do you put this whole thing together? What if we have now been taken out with a little bit of a profit in a particular stock that we've wanted to have as a buy and hold for a long time? What do we do? How do you get back in? Are you going to get back in? Is the market going to give you an opportunity? These are the questions I think we need to be able to answer. So when you look at the overall market as it stands right now, I believe, yes, there are a number of people that have been what we would call playing in the market. They've been playing the hot not necessarily all of them high-tech stocks, but stocks like the DDD, 3D Systems, the Twitters, the LinkedIns, etc. They've been playing that over the past couple of months. And now they're getting a real good feel for making money and short-term gains. What do they do? Are they the ones that are coming in right here at a moment where the market is becoming a little bit more vulnerable? Or are they correct? Here's another thing that I've discussed with some people. The folks that have never experienced a 55% or more decline in the market, or a 60 or a 90% a la QQQs back from 2000. Sometimes, or the housing market collapse, sometimes that's the very best way to go. You come in fresh, you have no baggage, and you just buy, and you're in the market at the right time, and you're holding and you're looking great. You know, sometimes knowledge is, even a little bit of knowledge is a dangerous thing, and sometimes ignorance is a blessing, sometimes it is not. So this is the market coming up in the next 3 months. I believe that's going to test the mettle of all of us in various ways. I still believe, as I have almost all of last year, going into this year, that stock selection is what you need. Good stock selection allows you the comfort to have a decent gain and then sit back and allow that gain to shrink a little bit, but it gives you the option to come back in with more or just to hold, treat it as a buy and hold. And that's the best way to go. Let's go to the market right away. The market is very interesting right now. The Dow is down 90 at 16.486. And it's fascinating because I discussed just this type of potential scenario that the day before the change to the new year, sometimes you're a little bit vulnerable because the very first day you start to see some selling. I don't think yet that we're looking at the Nikkei of 1990, was it, going into their 5 or 7 or 9 day, 11 day, I don't know what it was, holiday that they have going in from December to January, and that was its ultimate top up in the 37,000 range. Remember doing that hand chart, got that fantastic sell signal. I think this is just a heads up, as well as the fact that the VIX is up at 14.06, up 35, up 2.55%. Not if you've got the rotation going on, not if U.S. Steel is up nicely, not if some of the bank stocks are actually doing very well right now. I think we've got a little bit more to go to the upside. We'll see. So Dow's down 90 at 16,485. The S&P's down 11 at 1837. The comp index down 27 at 4148. Gold is having a fabulous day, up 21 at 1223. Now that pattern that we've been looking at, fortunately we have a metal type stock, which is doing very nicely. But let me explain to you, GCG 14. So the GCG, look at that. That's that H pattern that tested the left side low of 1187.90. This is the which contract? February contract. Let's see. That was the week of the 28th of June, and it goes all the way to the 1440s, up at 1433.70. Week of August the 30th, pulls back, and then it goes to, and this is the thing that you've got to watch for, it goes under 1187.90, it goes to 1181.40, and the bar in the H pattern, remember the H pattern, the Chapman wave methodology, that goes underneath the left side low, has to also spike sharply above and get back into the arch. And then there are a whole bunch of situations that we can look at. You remember UNG? UNG did that, but it did not take out the left side low. United States Natural Gas Fund, I believe it's called. That was the 17.80 low of the week of the 9th of August. What it did is it held above at 60.59 and held at 16.91, and that broke above the arch high. It's at P. It's in leg C, possibly peak C this week. That's the UNG. Silver is trading right now. Let me just have a look. Silver's trading up 69 cents at 20.06. Bonds are up 6 ticks. Crude oil is down sharply. Oh, fascinating. Look at this. USO. Remember the Chapman wave methodology? Look for your peak Ds or E's. Peak D, doji, reverse.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 50 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman, Tiger Technicians Hour. Don't forget, this is 877-927-6648 and Dow's down 80, S&P's down 10. Let's do a couple of things. Look at this. EUR-USD. This is the currency pair. Peak E in the Chapman wave, daily chart, leg D, possibly peak D in the daily, possibly. January has just started, we cannot even say. But it's leg D in the monthly, testing the barriers of that inside track, Chapman wave inside track resistance line. Now, look at this. You've got a couple of questions I'll answer as well. USD, JPY was asked about. And you got a leg D. Remember I said I believe that we're going to go to a leg D, recycle, and the instant restart in the Chapman wave methodology of the daily. So we were in leg D daily. USD JPY currency pair, dollar Japanese yen. And we're in a leg C. This is a toughie. I'm inclined to give this a parallel wave count. Just in case there is nothing yet that says in the weekly chart, because the stochastics at 94%, that I need to make too much fuss about it. I keep it as leg C, and the monthly is in leg C breakout. Now look at the dollar, DXY. This is the continuous contract. Very strong move off the low. And in the weekly chart, thank goodness for that bounce, because it was getting close to making the H failure pattern. Monthly chart still looks lousy, but nice move in the dollar right now. So let's put that together with the gold contract. And you're looking at, this is February gold, very strong move up from the low the other day, just under 1180. No, it was at 1181. And what we're looking at here, this is in a single move, going from 1181 to 1128. I'd say that's a pretty big move. Almost as big as the move from 1210 back in the 6th of December, 1210, to 1267. That's a 57 point move. So what's fascinating, what I said to subscribers this morning, it's very unusual. We've got the dollar up and gold. One of them probably should give by the end of the day or by tomorrow. I'm not sure which one it'll be. There's some reason going on why the gold is moving up here, and it has to do, I think, with the left side test. So far, successful break under, close above from that 1187. Let me put the date in here, 6/28/13, so I can always refer to that, 6/28/13. Okay, so I'm going to be watching this very, very closely, and that means that if you miss getting in appropriately, either Tuesday or today, there will be time to get into the gold stocks, because this should be a deeper move. There should be a rally to at least the doji candle of, well, the first level is 1267, 40 points above. That's going to be a test. A break over that takes you to the next doji candle of 1294. If at any point, and I'm going to be watching this very closely, there is a close today underneath 1218. It's at 1223 right now, up 2120. If there is a close below, then we've got to watch out to see if there's not a failure and the dollar continues. But to see them both push higher, very unusual, dollar and gold. So now let's do this. I wanted to do a couple of things because I did spend time on it over the weekend. Let me just show you something here. One of the reasons why I'm getting a little bit cautious, haven't done anything too much about it, is, look, Kiwi, QIWI PLC, number one on Investors Business Daily, QIWI, leg D, possible peak D after an instant restart in the weekly chart. Peak D, possibly peak D, and it'll be a serious peak D. If there's a close, it's trading at 55.54, down 46 cents. A close below 53.50, that's just 2 points lower. That starts to say, be careful, you're a little overextended. Anything can happen at this particular point. Leg B in the monthly says that Kiwi, I'm not even sure how you pronounce it, is in fact ads. So it has to do with advertising. Is in leg B in the monthly, and it could still move a lot higher over a period of time. Where would I love to be interested in the stock to see if it comes down to the between 52 and 49, starts to make that its home base, forms a base there. That might be a re-entry point for anyone who isn't in it. No, an entry point for anyone who's just getting out of PD or coming into the stock fresh. How about New Skin Enterprises? There's the break. I'm going to go through a couple of these during the break. I'm going to explain how some stocks can continue higher as they walk the 9 EMA. I'll be right back. Basil Chapman, Target Conditions Hour. Dow's down 87, S&P's down 11.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
"2014 has arrived, and Tom O'Brien has put together a special webinar for his subscribers to his daily newsletter, Market Insights. That will be taking place the evening of Tuesday, January 7th from 6:30 till 7:30 p.m. All you have to do to attend this live event, which will be archived, is to be a subscriber to Tom's daily trading newsletter on the day of the webinar. Tom will be breaking down the three most important sectors that will shape the markets in 2014, the S&P, bonds, and real estate. Tom will provide his subscribers with a technical and fundamental take on these three sectors and how they can shape the entire market outlook for the upcoming year. For a limited time, we're extending a free trial to Tom's daily newsletter to a full 30 days. And even if you had the free trial previously, you're welcome to sign up and take advantage of this special offer, only good till January the 7th. Don't let another year pass you by. Sign up for your 30-day trial to Market Insights today and gain access to this exciting live webinar with Tom O'Brien. Visit the front page of TFNN.com today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Let's go back to the... So, we had New Skin, NUS, which is holding really well. It's holding because it's walking the 9-period exponential moving average. This is a possible, I got an F, but the moment it goes slightly higher than 139.81, the high of the 23rd of December, I have to really call that leg C. Wait a minute. This is what I saw. Yes, this is that would be leg C, probably going to leg D, and it's leg F in the weekly, and it's E/B in the monthly. But it is a very strong-looking stock. It's at 95% in the weekly chart of the stochastic, and the MACD is very strong. But I'm beginning to see signs that say, probably a little bit limited to maybe 2-3 points on the upside. But if it takes out 135 to 134 support on the downside, that says consolidation ahead. So I'm watching this one very closely. Look at QIHU. This is number 3, I believe. QIHU, which is Q, which I had all notated, seems to have disappeared right now. I'm getting very, very upset with this. So that's a low of 1371, 1380, and that's 1380 there, 14. Okay, so here we go. This is peak A, B, we're at peak C, so the monthly is still very strong. Let me just write that in. A, B, C, and this is Q. Q360 Technology Company Limited, and it is right there. QIHOOO, And it's 360, 360, technology, company, and then it's still a limited. PTY limited? No, just limited. Okay. So the monthly, I haven't done the monthly yet. So let me do it quickly. This is A to B to C to D to E to F. A to B to C to D to E. All right, so there you are. E goes to F, down arrow, and we've got that, and we're going to go right there. Okay, so peak E in the weekly says needs a timeout, taking a timeout, but in the end you should still get a higher high above the all-time high of 96.74, and right now it's in peak, it's in leg A, B, possibly making a peak C in a retracement mode. We're going to watch this real closely because the numbers are very clear. Let me just do this again. So a close under the 3 days ago, 79.57. That's going to be negative. Point to an H pattern, but a push above 83.95 if it's not today, but tomorrow starts leg D. If it's today, it extends leg C. So far, just a consolidation. Nothing yet saying that there's something deeper to come. FB is Facebook. I did that 2 days ago. We'll do it again today. Facebook, in fact, made a peak E. Now I can put it down arrow because it crossed negative technically. And that says that on a very short-term basis, the 58 level in Facebook 58 is going to be key because a break above it extends leg E if it's this week, or if it's next week, it starts leg F in the weekly. But overall, Facebook should go to higher highs. Looking out. Why? Because it's in leg C in the monthly chart, and that should go to a D. They almost always do in IPOs. Go Chapman Wave leg D. Let's go to Ben in Tallahassee, Florida. Ben, how are you?
Very good, Basil. Happy New Year.
And a very happy New Year and a healthy year to you.
Well, speaking of health, I got a real interesting, extremely speculative stock for you.
Yeah, I can see that this one could go up in smoke, huh?
Yeah, I couldn't have said it better myself. So, just based on the legalization of the of marijuana now,
right?
The volume on this has just been unbelievable, and it's going in the right direction. I was looking at a monthly. It looks like you get a peak C on a monthly basis?
It's got a peak C. The pullback is one of those Eiffel Tower pullbacks that go straight up and straight down. Looks like a capital A. Let me put that in here so people know what I'm talking about. I call this the Eiffel Tower. Let me make it nice and big, and you'll see exactly how it fits in. I'll make it gray so it doesn't overrule everything else. Okay, so that's the pattern that we're looking at. Normally I put it underneath because that's the way it is. Except something very positive happened on the way down. It found support in the, I didn't even see that. This is a bulletin board stock. This is 0.085. So now let's talk about this. MJNA is in fact Medical Marijuana Inc. I did not realize someone had grabbed the name. What a name for the future. Medical, yeah. And it sounds so kosher. Medical marijuana, yeah.
Sure does.
Marijuana. Okay. Inc. And they even have Inc. to the name. All right. So medical marijuana trading from a low of 0.08. Now, this is not for the faint of heart, should I say. 0.0850 was the low on the 26th of November. And yesterday, on Tuesday, the high was 2.200. That's 20 cents. Today's high is 0.200 and a pullback to 160 and trading now at 19 cents. Now, I'm going to do two things, talk about this in two ways. One is, this is a stock that is, I would not put it into the speculative list. It is into the highly speculative list. Yes, it's in an area that is... Yep, an area that's becoming extremely popular. It is an area that is becoming extraordinarily mainstream. When you think about just a year ago to today, and when you start to see so many programs, so many TV shows where it's almost taken for granted that just about every single show needs to have something to do with marijuana or something like marijuana, that means that you are starting to find a normalization that never makes it acceptable to the majority of people, but it makes it acceptable to the greater portion of people that are watching those particular shows, because you become a little bit immune to it. So in fact, what's happened is this is like the icebreaker, and there's no question now that the legitimacy of even illegitimacy is going to be kind of overlooked by the legal authorities in many cases. So that makes this a very interesting thing. I don't know. I'd have to do a little bit of research to see in terms of how are they licensed, exactly what they do. Are they shops? Are they in the few places where it is actually legal? Or is it part of only the medical marijuana area? Because the medical marijuana area is going to be absolutely open to abuse. There's no question about it. So that it'll be almost as if you can walk in and say, I just bumped my arm. Could I have? And then nobody's going to be able to say no. So looking at it that way, do you have the position in this at all? That is a position in the stock?
I bought a small amount, and I thought, well, let's take a technical look at it. I thought I had a peak C as well in the monthly, and what really attracted me is exactly what you said. Is all the news, with states, actually officially legalizing it. It's got the medical in it. The only thing it's missing is an LLC at the end, and they'll have the whole package name, and
that's just a matter of time, maybe, huh?
The volume. I mean, the volume's incredible.
Technically, if the only fact that it's a bulletin board stock, meaning that you go almost book. Well, actually, they will give you you just put in a price to buy, and they're pretty much going to give it to you. It's selling that's always very difficult in this kind of stock because.
What is that? I'm sorry, what does that mean, bulletin board stock?
Well, I'm not sure if it is a bulletin board, but it goes into the category of a stock that's trading with 4 digits. In other words, it goes 0.1905, and that's not 0.19. That is 1905, and it goes into a certain category, and that category, just on a purely fundamental basis, that category says you've got to be somewhat careful for 2 reasons. One is these are stocks that are quite easy to buy slightly higher up. In other words, if you put the price in, I wonder if I could do that right now. Let me see. No, I haven't got the other one up, but let me just put it in to see if we can get something here. MJNA. So there are tons of 100 lots in there, but there are a couple of 1,000 and 3,000 lots even as we're speaking at 0.1905. And what does it say? There's a 2,000 over the counter. So the bid and the ask is not shown. You see, one of the problems is that you're kind of at the mercy of and I don't even know if they even have them anymore because so much is electronic. But it used to be that you were at the mercy of the person who ran the buying and the selling of the shares. They actually had the lock on this particular issue, or they shared it with someone. And what would happen is, if you put in a price, in other words, it's at 1905 right now. If you put a bid in at 18.95, you could wait all day, even though during the day you could see it trade at or even under the price. They just choose not to give it to you.
I bought it through my broker yesterday, TD Ameritrade, and it went through. Now that we agree on the monthly, how do you see the daily on this?
Well, let's do the weekly. The weekly's at a second run of a leg B. Now, what I like to see is a number of stocks. Many of the gold stocks have just done that. They've had a base that's built, and they've had a couple of spikes that have failed, and usually get to the third or the fourth spike after finding a base, and that really takes off, and that's exactly what's happening here. Now, this is the way I would look at it. If this is just a tiny, tiny part of your overall portfolio,
yes,
I'm going to make the recommendation that you've already got some, you've got it lowered down, you're making money right now. That means nothing intraday for a stock like this. MJNA, we're looking at, folks, Medical Marijuana Inc., trading at 1904. Someone that then just said, Gringo just said, bid and ask is 1903 to 1905. That's actually quite narrow. I've seen them way, way wider than that, so that's not too bad. And that also is because there is a 47 million shares. So I think you're exactly right. There's a lot of volume, and that's narrowing the spread. That's a very good thing. And that means that in this case, you probably could get out fairly quickly. What I'm looking at most importantly is that if you had to hold this, the candle that I'm looking at that says if it was able to rally and hold at 21.18, between 21.18 and 21.23, there's a really good chance that it's going to break into a higher high above that 25.05 high of the week of the 16th of August. That's number one. Number two is, how and where do you take profits in a stock like this? I'm inclined to say to you, you've done your homework. You've also stepped up to the plate. Other people should have a different way of looking at it. If they're picking up at the 19 area, that's different to picking it up in the 15 to 16 area. You've got to have a different attitude. But my thinking is that there's a sexiness here to the stock. It's in an area that's desirable. It's an area that's becoming legitimized. I would just say that if it is a tiny part of your portfolio, the core position you should hold, and you should have a little trading position. And that trading position, now remember, this is not for everybody. This is specifically for Ben. He watches the market very closely. And I would actually have a target of between 0.28 and 0.32. If it actually gets to 0.35 in the next 5 to 7 trading days, and this is something that's moving like lightning, if it does that, there's a chance the monthly could even make a leg D in January above the high of 0.50. Folks, please be careful with stocks like this. If you've traded this kind of stock before, that's one thing. If you've never traded it, getting out is sometimes very difficult. In other words, let's imagine that today at 2 o'clock it's bounced to 0.23. But suddenly, instead of holding there, remember, I'm talking about closing basis. Each time I talk about the price, it's the closing basis. If instead intraday, it suddenly closes, it starts to move at 340. It starts to close down 0.18. 0.17, 0.16, 0.50. Getting out is very difficult because you're going to have to keep lowering the price that you want to get out if you want to get out at a specific price. So be careful with a stock like this. But in terms of having a little fun, Ben, I think you got in correctly. I'm in leg B in the daily, leg B in the weekly. I think you've got something here. Thanks for bringing it to my attention.
Good. Thanks, Basil. Have a great
Thank you. And good luck. Good luck.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Ignitions Hour. Let's do a couple of other things here. Most importantly, what I'm looking at is in the Dow. A very good question I had, and the question is, Basil, we could be an F in Dow. No. The question is, yeah, it's a very legitimate question. I'll explain why. The last important low of the Dow was at 15,522.18 on the 5th of November. Then you went, remember, the objective of the Chapman wave methodology is to take you from the lowest, most identifiable low bar to successively higher peaks, labeled with capital letters, peak A, B, C, D. And at D, that's where things can happen. They don't have to, but that's where things can happen. Well, you went peak A on the 7th of November at 15,797. You went to peak B at 1630.28, 16,030.28 on the 18th of November. You went to peak C on the 26th of November at 16,070. And then what happened? And this is very interesting. So D comes in on the 29th of September. D comes in at 16,174. It pulls back to 15,703. 15,703 is way above the low of 15,522. So it says that when you break above D, you got a cup formation. Normally I say cup formations go to at least a D, but it is a cup formation breakout, and we've gone to 2 higher peaks. Well, they could in fact be B/E, and I've chosen not to do that. So I'll put it in to show what it could be, E. And yes, we've made a peak F today if there's no new high bar. But the stochastics at 95%, the MACD is still strong. I'm just expecting that this is a sell-off that should have occurred last week, a deeper sell-off, and it didn't occur. It's a cumulative sell-off, and that within 2 days we'll be stabilizing and we'll be going to a D and maybe an E. But it's a great question. Why? Because the QQQ series, the NASDAQ 100 QQQ series is in, I'm calling that E. That's that continuation pattern. This is E. I'm calling the NYA.X peak D. I'm calling the IWM peak D. So it's absolutely a legitimate question. My only contention is that it would be very unusual to flatten out at 95% or so, 97% in the technicals of the daily to make a top without at least an attempt at a retest of the previous high. Now, to put that together with other things, when I'm looking at what I consider to be coming up, the most vulnerable sectors that fund managers keep buying every time there's a decline, they're actually holding really well. When I look at United States Steel, X, in leg E and holding very nicely, it's saying there's internal strength. It could fail, but right now it's showing internal strength. So I'm trying to put this all together, and I'm saying, yes, might have missed the exact top, but it's telling me I'm correct. And remember what I was talking about on Monday and Tuesday? We had a caller. I said, I can't remember how it came about. I said, buying the UVXY in the lower area towards the 16s is going to be, I think, one point risk with 2 to 3 to the upside, and that's trading at 763 right now, up 85 cents. And that's telling me that we are going into a toppy-ish period right here. How you can get the exact top and all that, I have particular ways. I hope that I'm able to demonstrate it once again as we've done before, usually in leg D in the Dow, where we start to implement our plan. I'm going to have to give it a little more time. I still believe that I've got to respect. We've taken our profits in General Electric, but there's another peak D. I have to respect the fact that we've got a lot of Ds coming in right here, and I'm saying very limited upside. We are getting to a topping process as I speak. Stay tuned for Larry Pesavento. Should be a fantastic
patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.